Morning, Steve Free in Chicago with the morning grain comments. Well, markets are lower. Soybeans right now down about 11 cents. You got soybean oil, soybean meal lower. Corn's only down about a penny, but wheat's anywhere from 12 to 13 cents lower. In the news, I think that yesterday, U.S. Soybean exports to date were down about 7%. Corn down about 3%. Well, down 27%, sorry, and wheat is down 3%. As far as the weather is concerned, down in South America, it's still dry in Argentina and southern Brazil. People are bringing Argentina's crop number, both corn and beans, down from USDA's estimate. The second week forecast, for the most part, has some light showers in northern Argentina, but dry in the south. The 6Z map overnight put some pretty heavy rains in Cordoba and Santa Fe, but the 0Z map this morning took those rains out. So I think the beans are probably trading that 6Z map more than anything else. I think that markets also right now in the bean complex, you're still in this trading range for the most part, 1465 to 1485. Corn supported 644 versus 660, and Chicago wheat 720 versus 740. Again, the soybean March beans is at 3-month low. Soybean meal finding some long liquidation from a very large fund long position. The Dalian futures, beans, meal, soybean oil, palm oil were all lower. And the recent rally in soybean oil was following the higher crude market. The U.S. Ag Attaché increased the Brazil soybean crop to 153 versus USDA's 152. Though Argentina, people are talking about 40 versus 49.5. Matif rapeseed made 3-week lows, and the 9-month high in the euro is offering resistance to those markets. Malaysian palm oil stocks were down 4%. Production was down almost 4%. Exports down 3.5%. That lower stocks and production failed to support the palm oil market. Matif corn is at 3-week lows. U.S. plains remains dry. North Africa is dry. And there's concern about lower demand in the wheat market as Russia has the lower wheat prices, and USDA on Thursday is expected to show higher winter wheat acres. USDA could also raise the U.S. corn and soybean crop, and they could lower corn and soybean demand and increase the carryout. So in general, the knee-jerk reaction should be a little negative, and I think the market's trying to put in the fact that 2023 is about demand, and is the demand there, and what price do we need to go down to increase demand for U.S. exports versus last year's 2022 trade, which initially started out with the tight supply. We also had the Ukraine war raising concern about the Ukraine exports, but at the July high, the market found resistance on U.S. crop conditions and also the Russia opening up the Ukraine export corridor.